Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, July 3rd, 2008. Well, as most of you know, today on the indexes in the United States, the markets did close at 1 p.m. Eastern Time on the shortened holiday trading day prior to July 4th tomorrow. Now, the keys here about the market is, number one, a lot of people expected today to be a lackluster day. It was not the case. A lot of people expected the volume on this market to be light today. That was not the case either. You had tremendous volume. In fact, 1.8 million contracts traded on the S&P futures, which is a very, very solid amount of volume through 1 o'clock. All right? Now, a few other keys to this market. Obviously, we know we're in the eye of the storm here. InTheMoneyStocks.com has called for a pivot day, a pivot turn period from basically starting as of today through next Tuesday, and that period basically is setting up for a pivot in the markets where we do believe that either the low will be put in or we'll start to have that move up. Either way, it's a pivot now towards the upside, and that's what InTheMoneyStocks.com has looked and analyzed the charts, taken price pattern and time indicators, and we found that there are many pivots here, many points on our analysis that are pointing to a reversal in trend in the market in the near term. Now, it doesn't mean that, now we're going back to the highs in the market. Absolutely not. What we're saying here is that the markets are due for a good solid bounce, and the pivots off of our analysis are showing that that should be happening through next Tuesday. Maybe the lows are put in here, and you start to get that reversal to the upside from the turn date. All right, so keep an eye on that market over next Monday and Tuesday. Today was a mixed day. You basically had the S&P up a point, the Dow was up about 73 points, and the NASDAQ was down about 7. Now, the NASDAQ was more underweight because of NVIDIA, a technology stock that came out yesterday and basically warned. 10 billion market cap before today, so it's a sizable company, and they really did get slaughtered today. The stock itself was down about 30% plus in just an unbelievable turn of events, as they warned. They were expecting about a billion in revenue, I believe, and they came out and said we'll only do 850. So that's a huge miss. I mean, that's a big issue. So overall, that took a couple sympathy plays down with it in the technology sector, and the technology was a little weaker today, but let's face it, down 6 points, that's nothing big on the NASDAQ, especially when the Dow and the S&P were positive. Now, the big thing, obviously, folks, when we're talking about everything coming together for a possible bottom put in here over the next few days and a reversal to the upside coming shortly, is to follow oil. That's everything about oil. It's all about oil and the dollar. Now, the interesting thing about today, we all talked about this yesterday, that the ECB, the European Central Bank, was putting out their rate decision this morning, and they did do that, and they basically raised by a quarter point. Now, that was fully expected in the market, and as soon as we got that, you didn't really see a sell-off, you didn't really see a rally. The market just stayed, the futures just stayed this morning right in line with that. The key was, at 8:30, you got some jobs data, which was not that great, but not that horrible. But then also you had the wording from the head of the ECB there released, and he basically was a little more dovish, and that means less hawkish, meaning not so hard on inflation, meaning future interest rates may not be raised as much as the market expects, and on that the dollar began to strengthen against the euro, gold began to come down, and oil began to come down as well. And we'll kind of look at those charts here quickly, and I want to just show you that. The UUP is what I follow, and it's just it's a small ETF, but you can see the gap up today. Here's where it closed yesterday, here's where it gapped up to. Gapped up a little higher, but came in and then rallied back to close up nicely on the day, and that's actually a decent move. And to look at the daily chart, you can see here we were hovering on the lows of the support areas on the ETF that symbolizes the dollar, and you can see the move up today. So you did have a little bit of a move up today in the dollar, and that helped push gold down. Now, a lot of times you would say, well, all right, well, wouldn't that push oil down? It did initially, but then you have a couple issues here coming into the market. Number one, everyone out there is talking about $150 oil. It's almost like a magnet. So the negative here is that even though the dollar strengthened, it didn't keep oil down. Initially it did, but oil began to rally back. So not only do you have that 150 catalyst and every person on TV calling for a move to 150, but you also have all basically the geopolitical scene right now is very, very rocky, and you also have a little bit of premium built in for the long weekend. Anytime you have a holiday weekend where there's a lot of travel, oil generally runs up into that. And then afterwards, sometimes it comes down after the holiday weekend when travel's done with But that's one issue, and then you also have the terrorist premium. Anytime you have a major holiday in the United States, oftentimes oil pushes up ahead of that prior to that holiday in expectations or in fear that there may be some sort of event. And, hopefully that does not come to fruition, and we will have to see. But nonetheless, oil did climb here. Most of the day was kind of just trading sideways to up, flattish, but the US oil closed down 4 pennies. Now, oil on the day when the US oil closed was maybe up 50 to 60 to 70, 80 cents, just up a little bit on the day. Pre-market, it had been up $2. Alright, so it had a big fallback, and you can see that right here, how oil was up in this range at the start of the day, and then fell back down, then rallied a little bit, pushed up big, but sold off that, and came back down, and then pushed up here, and then kind of closed in that middle level on the USO. And that basically shows you the movement of oil all day. Now, this is the key, folks, because the markets closed at 1, the USO closed at 1, oil closed at 2:30. Had a full day of trading on the oil market there. And what happened again, just like yesterday, remember yesterday the big monster move into 2:30? Right here, yesterday? Same thing happened today. Now, you don't see it in the chart because we closed on the USO at 1 o'clock. But at 2:30 or 2:25, oil began to push up again. And again, if the markets were trading, they would have sold off on that, I do believe, as that's been I'm just calling it how I see it here. When the oil goes up, the markets come down. It's as simple as that. And oil did push up. The USO today closed at 116.80, $116.80, and the after-hours prints on the USO were at 117.60. So you basically had an 80-cent move up that's not reflected in this USO after hours from 1 o'clock to 2:30, where oil has pushed up. So now it's going to be a key here, folks. This doesn't, for all we know, oil comes down Monday, and that does seem to be, as we have this turn date that we've called, again, from our analysis for basically starting today through next Monday and Tuesday, we're basically looking for that to come to fruition. And in order for this market and this turn date to work out to the upside, you're going to have to see a fall in oil. There's no way that this market can have this turn date happen that we're seeing pointing in the charts if oil stays up. So it's like an intricate puzzle. Think of it this way. Without a piece of the puzzle here, here, and here, you're not going to be able to have the market down. And there are 3 to 4 aspects that are going to be key for this market to rally and for the oil to come down. Number 1, the dollar cannot get weaker. It bounced a little today. That maybe kept a little wraps on oil. Instead of being up 3, it's only up $1.75 right now at the close at 2:30, and that's fine. All right, so that's number 1. Number 2, financials have to maintain strength, and financials were strong today, and the XLF was basically flat on the day, but you had some good moves. Goldman Sachs was positive. I think Lehman had a decent day. Lehman was up 50 cents today, but nonetheless, the overall XLF, which is the financials, it was flattish, and again, it had a good move yesterday, and we're seeing if this is making some sort of bottom. It is coming into resistance, and I'm showing you the daily XLF, which signifies the financials. But notice the little uptick here. That's good. It's hitting resistance right here at the 20 moving average, and we'll have to see, does it sell off now back to the lows, maybe make a double bottom, or does it advance a little more here through that 20 moving average? And we will know more very soon, because there's always some new financial information coming out. How are things looking? But obviously those are 2 aspects. One, the dollar. One, the financials. The other one is definitely just oil and the geopolitical scene. Now, geopolitical means anything to do with the Middle East, anything to do with possibility of wars, anything to do with a cutoff in Nigeria and the terrorist activities. All that stuff is extra built in. Now, again, when you have the run-up into the close today ahead of a long weekend, there's a couple ways to look at that. Number 1, you have to look at the terror premium in there. You have to look at the long weekend. You have to look at the speculators and talk about 150 oil coming shortly, and that's all in the price, and that is causing the move up. But the question will be, where do we see it next Monday and Tuesday? I mean, that's what it all comes down to, folks, is where is this going? And so as we get into this, I want to just touch base here. I want to quickly show. You can see the intraday moves again on the ES was very just whippy. You had some big moves up and down, but lo and behold, the markets closed flat. All eyes are on oil. All eyes are on the possibility here of a top in the oil. We'll see if we come into this. Are we going to go to 150? Most people are saying yes. I'm going to stay back and say at inthemoneystocks.com we think it'll get close, but almost too many people are expecting that, and we'll have to see. Does it become a self-fulfilling prophecy? That'll be up in the air as well. So nonetheless, keep a close eye on this oil. It's going to be everything you throw in a little of the XLF, you throw in a little on the dollar side. Well, the dollar really has to do with whether oil's up or down as well, except for the geopolitical side of things. But nonetheless, oil settled today at $145.29, up $1.72, and again, a tremendous move that's not reflected in the USO. So keep a close eye on this. The USO at 117.60s after hours here, and this is just tremendous, folks. So again, looking over the course, I hope everyone has a wonderful 4th of July. I hope everyone has a great weekend. But next week, we're at a pivotal point on these charts, and I can't express to you guys enough. Look at the levels here. This is the SPY daily. Look at where we are. Alright, this is no joke here, folks. This is right in line here. You basically have us holding the March and January lows, triple bottom. Are we going to hold them? Are we not? Our pivot point analysis says yes, we do hold them in the near term for about a 2 to 3 week rally from the pivot days of next Monday, Tuesday, as we put in the lows hopefully next Monday or Tuesday and start that move up. The question is, how long do we go up? We see it for 2 to 3 weeks possible there, and then we see a possible retest of the lows, and should we retest those lows, then you look for a break. But nonetheless, we're traders in the near term. We're going to try to capture this, and we'll see if that happens. Have a wonderful day, guys. Be safe. Great holiday weekend. We'll see you on Monday.